Hello everyone and welcome to the Vinum Assets Strategies for Successful Wine Investment. My name is Adam Lindsay, I'm the Client Director at Vinum Assets and I'll be your host today. Firstly, I'd like to thank you for making time to join us for this presentation, which is designed to help potential investors better understand the fine wine investment market. It runs for approximately 20 minutes, and afterwards, if you have any questions, please contact your local Vinum Assets office. We've provided full contact details at the end of the presentation, should you need them. For those of you who aren't familiar with Vinum Assets, we're a specialist boutique wine investment advisory service and have been trading since 2007. We were founded in Hong Kong by Justin Alexander, who's a veteran of the wine investment industry with over 10 years' experience. In mid-2011, we opened a second office in Sydney to service our Oceania clients. Vinum Assets are a full trading member of the London International Vintners Exchange, also known as LiveX, which is the leading global fine wine exchange. It's through this platform that Vinum Assets predominantly buy and sell wines on behalf of clients. Statistics from LiveX show the selected fine wines have been delivering 14.4% compound annual growth rate for the last 20 years. And our mission at Vinum Assets is to achieve this return for our clients net of all costs. In this presentation, we'll provide you with an insight into how these returns can be realized with expert guidance and structured process. So today's presentation can be divided into three sections. Firstly, we'll provide an overview of the wine investment market and look at what actually defines an investment grade wine and the factors that influence the secondary market pricing. Next, we'll take a look at some interesting statistics on the wine investment market and see just how it stacks up compared to other major market indices and asset classes. And finally, we'll talk through the steps involved in creating a successful wine investment portfolio and some of the pitfalls that need to be avoided to ensure maximum returns. So an important question that we need to ask before we go much further is just how do we define investment grade wine? Well, we look for wines with a strong secondary market. Wines that are frequently traded on merchant exchanges such as the London International Vintners Exchange, otherwise known as LiveX, and international auction houses with specialist fine wine departments including Christie's, Bonhams, Sotheby's and Acker Wines. Investors also look for wines that display an ability to improve in bottle over decades, and in some cases even centuries. We also look for wines that are produced by chateaux with outstanding history and heritage that will often date back to centuries and in some cases even millennia. Critical acclaim from critics such as Robert Parker, who's considered by many to be the Standard & Poor's of the fine wine market, can ensure ongoing demand for the life of a highly rated wine from the best vintages. Now, all things considered, only 25 of the top Bordeaux chateaux and a mere handful of others outside of Bordeaux will ever meet these criteria. In fact, Bordeaux wines accounted for over 95% of LiveX's trade in 2010. It's important for an investor to understand when looking at an asset class what are the factors that are going to influence price. Firstly, with fine wines, we can look at the new markets. In the last decade, we've seen the rise of the BRIC countries, Brazil, Russia, India and China, all of these countries seeing a significant new wealthy upper middle class emerging who have an appetite for established luxury products and brands. The biggest growth from the BRICS to date is Hong Kong and China, where we have seen a massive 6,500% increase of Bordeaux imports in just the last 8 years. This unprecedented growth has made this region the #1 Bordeaux importer in the world. A key contributor of this growth was the abolition of wine tax by the Hong Kong government in 2008, which almost overnight made it the #1 fine wine auction market in the world, overtaking both New York and London. It's important to note that the investment grade wines that we're talking about here are not every vintage, but only the very best vintages that occur perhaps once or twice a decade, 3 times at most. And we're looking at very limited numbers of brands, those 25 chateaux that I've already touched on, and within each of those selected vintages, we're looking at production runs of anywhere between 10,000 to 25,000 cases. These are incredibly limited, finite numbers that are in demand by a large and rapidly growing pool of wealthy consumers. And as each year passes, each vintage becomes not only fewer in number through consumption, but also improves in quality. This is a characteristic not held by any other investable grade asset. The next factor that we need to understand is the power of brands. Most of the investment grade wine producing chateaux are household names to many of us. Lafite Rothschild, Latour, Petrus, Aubryon all evoke a sense of prestige and heritage. These are not highly speculative startups or cult wineries, as was the term being used for many unknown wineries a few years ago. These are the most established wines of the world and have been known to fine wine consumers and collectors for centuries. Brands such as these simply do not appear overnight, more so they have evolved and developed over the centuries, much like the wines that they produce. Put simply, these are the wine-producing powerhouses of the world with reputations forged over centuries. Their finest vintages will always be in demand. More recently, we have witnessed the acquisition of some of these chateaux by companies such as LVMH and Chanel, among a number of other luxury brands that have spotted the potential and synergy of acquiring an established chateau. Perhaps unlike many of the other corporate acquisitions, we have witnessed the astute acquiring parties do nothing other than ensure the status quo is maintained and adding only their international marketing expertise and sales channels, thus again ensuring even greater demand for these limited finite wines. Critical opinion, and in particular that of Robert Parker and his publication The Wine Advocate, who have been rating and scoring wines for over 30 years now, really do lend a lot to the ongoing value of fine wines. Parker rates all wines out of 100 points, and wines with investment potential will normally see a score of 95 and above points. Parker is treated almost like a rock star in Asia, recently announced his magical 20 selection of Bordeaux wines outside of the 5 first growths. He did this in Hong Kong. It was the largest simultaneous wine tasting ever held in Hong Kong and reinforced his position as the undisputed sage of Bordeaux. We're all familiar with the phrase used in property circles, location, location, location. Well, with wine, it's vintage, vintage, vintage. Production techniques have certainly improved and evolved since the more volatile years, up until the first half of the 20th century, when Chateau could be producing a stunning wine one year and then have an abysmal run and produce near undrinkable wines for the following decade. That said, strict governmental enforcement of production protocols and standards have to be met by Chateau, meaning that great vintages are still very much climatically dependent and cannot be manufactured to order. Typically, we will see 1 or 2 investable grade outstanding vintages come around every decade or so. There is no notable point in the history of Bordeaux where we can say that demand for its finest wines has diminished for a sustained period. With the UK becoming its first major export market over 900 years ago, we have since witnessed a direct correlation emerging of booming economies developing a taste for and demand for Bordeaux. More recently, Japan in the late 60s through to the 80s, the USA from the 1970s through to the late 90s, and currently Hong Kong and China, both relative newcomers to Bordeaux and already the world's #1 Bordeaux market. Looking forward, as we touched upon earlier, the remaining BRIC countries look poised to join this ever-growing group of Bordeaux consumers, which will further impact upon supply. The interesting pattern that's clearly emerging here from these markets is that once they have developed a taste for Bordeaux, the demand stabilizes irrespective of local market conditions. Okay, so that concludes our overview of the market basics. Next up, we're going to take a look at the investment case and see just how the fine wine market stacks up against some of the more familiar major market indices and asset classes. The London International Vintners Exchange, or LiveX, produces a number of indices based on historical trading data, both from the exchange and also international auction houses. One of their primary indices is the LiveX Investables Index, which comprises of 200 selected wines from 24 chateaux, ranging from vintages 1982 to 2008. This index is comprised of physically available wines that must meet certain criteria in terms of critic scores and also production. The intention of this index is to determine the appreciation in value the fine wine investment market has seen over the past 2 decades and provides an indication of potential growth ahead. As we can see, the LiveX Investables Index is currently tracking to 14.4% compound annual growth rate for the last 20 years. Naturally, fine wines do attract ongoing service costs, as we'll talk about in a little while, but even when we account for those, we believe that a correctly selected portfolio of wines will still return double-digit compound annual growth. So just how does wine stack up against similar alternative investments? A new acronym coined by economist Joe Roseman, SWAG, which represents the higher performing asset classes of silver, wine, art and gold, can be seen here in this chart, and it makes for interesting viewing. Over the last 20 years, all but art have performed admirably, but the standout player is most definitely fine wine, which not only represents the highest return in the group, but also attracts the lowest risk in terms of volatility. Now let's take a look at fine wine's performance over the last 10 years. The LiveX 100 index consists of 100 of the most sought-after investment-grade wines, which are made up of wines predominantly from Bordeaux. LiveX was launched in 1999, and like many new businesses, trading activity was initially low. As the founders began to add more and more merchant members, trade increased and a more accurate reflection of the fine wine industry began to take shape. Today, LiveX has over 330 trading members worldwide, including Vinum Assets, which represents 85% of the $4 billion Bordeaux wine industry. The picture that has emerged over the last 6 years is a long bull run with two corrections. The first correction was a reflection of the market uncertainty after the collapse of Lehman Brothers in 2008, as investors realized their gains in order to liquidify their portfolios. The second correction, after some 3 years of significant growth, was caused by an overpriced 2010 Emprunteur campaign and uncertainty in Europe. There are a number of interesting parallels that can be found in both of these corrections. Both occurred over a 6-month period and equated to a 22% downturn. Fortunately, the fine wine market has proven itself very robust in times of general market volatility, often being the last investable to be affected in a downturn and the first to recover. Following the 2008 correction, the 100 index rallied 74%, and investors are once again well placed to take advantage of the latest correction, as the index is now demonstrating at the start of 2012 with its first gains in 7 months. So we've discussed the fine wine market in general, and now we have an understanding of the opportunity that exists for investors looking to diversify their portfolio with a low-risk, uniquely diminishing asset. So what next? Do we simply call up our local bottle store and buy a few nice bottles of Bordeaux, stick them under the stairs for a few years, and sell them to a willing buyer for a nice healthy return a few years down the road? Well, you could try that, but the chances of succeeding in making a reasonable return would be highly unlikely for a number of reasons. The reality is that unless you follow some key steps when investing in fine wines, the chances are you'll end up drinking away your investment rather than capitalizing on it. Vinum Assets have over a decade's worth of experience in fine wine investment, and on the next few slides, we'll share with you some of the key steps to success that need to be considered to achieve a successful investment outcome. So let's take a look at those keys to success. As we've already discussed, there are just a small number of chateaux and an even smaller number of wine producers outside of Bordeaux who are capable of producing an investment-grade wine. That said, when we consider that each chateau has upwards of 30 tradable vintages from which to choose from, this still presents the daunting challenge of analysing many hundreds, if not thousands of wines in order to pick a strong performing portfolio. Important as identifying a good investment wine is to find a secure and trusted source from where to buy it. 3 considerations in this process should always include buying from a trusted merchant or platform that operates a full buyer protection policy, covering provenance and condition of wines. Buying at true market value. And also buying wines that have not been subjected to any taxes or duty, otherwise known as in bond. Vinum Assets meets all of these requirements by adhering to the London International Vintners Exchange merchant trading policy, the platform where client wines are sourced and traded. The London International Vintners Exchange, more commonly known as LiveX, was established in 1999 and has become the global marketplace for fine wine. The LiveX Fine Wine Exchange provides an integrated trading and settlement platform, bringing new standards of efficiency and transparency to a traditionally opaque market. LiveX is a global business. It has over 330 members in 33 countries, spread across 6 continents. It's estimated that the LiveX membership, which is exclusively for merchants, accounts for more than 3/4 of global fine wine turnover. Vinum Assets are a full trading member of LiveX. In a little over 10 years of operation, LiveX has built the world's largest database of standardized fine wine prices and is now also the leading source of independent and impartial market data. So our third step in the process is for a buyer to have their newly acquired wines validated. With the high value of the wines being traded, it is critical that all investments are independently validated and checked when received from the seller. LiveX offers a world-class validation service through their storage and cellaring arm, Vine. The vine validation process checks wine to neck levels, that bottles, labels and cases are all in good condition, and provides security banding and case ID. Upon completion of the validation process, Vinum Assets will send clients a certificate of title incorporating a high-res photograph of each bottle and case. In the rare instance that wines do not meet the strict validation criteria of vine, then either the wines can be replaced by the merchant or a full refund offered. All of this is guaranteed and brokered by LiveX, who act as the intermediary to ensure complete peace of mind for buyers. Crucial to any successful wine investment strategy is the storage of your investment. Today's buyers of premium fine wines will insist on understanding the wine's provenance or its storage history, where it was stored and by whom. Sellers who cannot provide their wine's provenance will often realize a lower sale price compared to those who have proven provenance. So storing your wines at home, even in correct conditions, will often not satisfy many buyers as to the wine's provenance. Today's market demands that wines have been stored in specialist commercial facilities that are typically in bonded zones. Thankfully, there are world-class independent providers in the UK, Hong Kong and Bordeaux who offer secure, managed, climatically controlled storage facilities. Your Vinum Assets broker will be happy to introduce you to these companies at your request. By storing your wines with a recognized cellaring specialist, you'll ensure that your investment doesn't end up looking like this, but remains in the same condition as when first purchased, and thus ensuring maximum market value. As with any investment portfolio, regular independent valuations and market updates are a key component to a successful investment strategy. Vinum Assets provide all clients a biannual valuation and report for their entire portfolio. All valuations are determined independently through the LiveX platform, and at any given time, clients can request ad hoc valuations by phone or email through their dedicated Vinum Assets broker. Of course, no investment cycle is complete without a realization of the returns gained. The old adage that something is only worth what someone is prepared to pay for it is never truer than in the wine market. For that reason, it's perhaps the most crucial element in wine investment that an investor has a range of options from which to resell their wines through. It's an unfortunate reality that many investors, perhaps new to the wine investment market, are sold what appears to be well-priced investment wines, only to realize that due to conditions of sale, their only option was to resell back to the broker at a price of the broker's choosing. At Vinum Assets, we believe in transparency and choice. We guarantee that all clients can trade their wines through LiveX at any time without any additional fees being charged by Vinum Assets. This ensures that clients will always be able to realize their wine's true market value whenever they choose to. But that's not the only option. The auction market presents some terrific opportunities for resale, but sellers must usually accept lower than LiveX reserves and additional fees charged by the auction houses. A Vinum Assets broker will always be on hand to provide clients with impartial, commission-free guidance as to the best channel for resale, ensuring maximised returns. So there you have it, 6 steps to successful wine investment that to the newcomer can present a number of potential pitfalls. Vinum Assets can guide you through these steps and make fine wine a sound, profitable and enjoyable diversification of your investment portfolio. Just finally, it's important to note that successful investors in fine wines plan for a 5-year investment cycle. Historically, the best wines from the best vintages have returned double-digit annual growth over this period for the last 30 years. Well, that concludes our presentation on strategies for successful wine investment. If you have any questions, then please contact us at your nearest Vinum Assets office, which is listed at the end of this recording. My name's Adam Lindsay, I'm the Client Director at Vinum Assets, and thanks for taking time out with us today. We'll look forward to speaking with you soon.
Wow.